Alright folks, welcome back to the channel. Today, we're tackling a seriously hot topic, AI and investing. Everyone's talking about it, but is it the future of finance or just another tech bubble waiting to burst? The headlines are screaming about AI-powered hedge funds crushing the market and algorithms picking the next big winners. But before you throw your life savings at the first AI-recommended stock, let's pump the brakes and take a closer look. Are these AI stock picks a legitimate path to riches or a recipe for disaster? That's what we're going to unpack today. Stick around. You might be surprised by what we find. The promise of AI in investing is undeniably seductive. Imagine an algorithm that can analyze massive amounts of data, identify patterns humans would miss, and predict market movements with laser-like precision. No more gut feelings, no more emotional investing. Just cold, hard data driving your portfolio. That's the dream, right? And it's true. Some AI-driven hedge funds have delivered impressive returns. But the key word here is some. The reality is far more complex than the hype suggests. So, what stocks are these AI algorithms supposedly loving right now? Well, based on current analysis and reports, names like Alphabet, GOG, NVIDIA, and AMD often pop up. These are companies heavily involved in AI development, infrastructure, and applications. Other potential contenders include companies providing cloud computing services like Amazon, AWS, and Microsoft Azure, as well as cybersecurity firms that protect against AI-related threats. But remember, this isn't a magic list. These are just examples, and the specific recommendations can change rapidly based on market conditions and algorithm updates. Let's zoom in on Alphabet, GOG, a company that's frequently mentioned in the context of AI investing. Why? Because they're a major player in AI research, development, and deployment. From Google Search to Waymo, their self-driving car project, AI is woven into the fabric of Alphabet's business. They're also investing heavily in AI infrastructure, with a planned $75 billion in capital expenditure for 2025. This investment signals their commitment to AI and its potential. However, it also carries risk. Will these investments pay off? Will they be able to maintain their competitive edge in the rapidly evolving AI landscape? These are crucial questions to consider. Okay, let's break down the potential impact of articles and analyses pushing AI-driven investment. First, we're going to see increased investor interest in AI stocks, plain and simple. More eyeballs on companies like Alphabet, NVIDIA, and others. This can lead to short-term stock price fluctuations as retail investors jump on the bandwagon or algorithmic trading systems react to the news. We'll also likely see increased demand for AI infrastructure, servers, data centers, the whole shebang. And finally, a shift in investment strategies as more folks try to incorporate AI into their decision-making process. But that's just the surface. Now, let's talk about the ripple effects. This increased investment in AI will fuel growth in related industries. Think semiconductor manufacturing. Companies like NVIDIA and AMD will be cranking out those AI chips. Data storage providers will be swimming in demand. Cloud computing platforms like AWS, Azure, and Google Cloud will see increased usage. And don't forget cybersecurity. As AI becomes more prevalent, the need to protect against AI-related threats will skyrocket. We'll also see increased competition in financial services as traditional institutions try to keep up with AI-driven hedge funds and robo-advisors. And of course, the demand for AI talent will only intensify, leading to higher salaries and a fierce battle for skilled professionals. But what about the long-term consequences? This is where things get really interesting. AI adoption could lead to job displacement in some sectors, while creating new jobs in others. This means we're talking about workforce retraining and adaptation on a massive scale. There's also the potential for increased wealth inequality if AI-driven investments primarily benefit the wealthy. And let's not forget the ethical concerns of bias, transparency, and accountability in AI-driven decision-making. This could lead to increased regulatory scrutiny. On the flip side, widespread AI adoption could boost productivity and economic growth. And AI-powered tools could potentially democratize investment, making sophisticated financial analysis accessible to a wider audience. But that depends on equitable access and understanding. Now, let's address the elephant in the room, the AI bubble. Are we in one? Is it about to burst? The text mentions concerns about inflated valuations and unsustainable growth in AI-related stocks. And honestly, it's a valid concern. The hype around AI is undeniable, and it's easy to get caught up in the frenzy. But remember, not every AI company is going to be the next Google. It's crucial to separate the hype from the reality and avoid investing in companies with unrealistic valuations. Another risk to consider: AI underperformance. Can these algorithms consistently beat the market? The article questions whether AI tools like ChatGPT can actually outperform human experts in stock picking. And that's a fair question. AI is a powerful tool, but it's not a crystal ball. Market conditions are constantly changing, and algorithms need to be constantly updated and refined to stay ahead of the game. There's no guarantee that AI-driven investment strategies will always deliver the expected returns. In fact, some may even underperform the market. And what about algorithm dependence? The more we rely on these complex AI systems, the more opaque the decision-making process becomes. It's like a black box. We know what goes in and what comes out, but we don't always understand how the algorithm arrived at its conclusion. This lack of transparency can be problematic, especially if the AI makes a mistake or causes harm. We need to be able to understand and validate the reasoning behind these AI-driven investment decisions. The effectiveness of AI models is heavily dependent on the quality and representativeness of the data they're trained on. If the data is biased or incomplete, the AI's recommendations will be flawed. It's the classic garbage in, garbage out scenario. This is a particularly important consideration in finance, where historical data may reflect existing inequalities and biases. We need to be vigilant about ensuring that AI algorithms are trained on fair and unbiased data. And finally, let's talk about cybersecurity. The increasing reliance on AI systems makes financial institutions and investors more vulnerable to cyber attacks and data breaches. Hackers could potentially manipulate AI algorithms or steal sensitive data, wreaking havoc on the market. Cybersecurity is no longer just an IT issue. It's a financial risk that needs to be taken seriously. Beyond the financial risks, there are also important ethical considerations to keep in mind. The widespread adoption of AI could lead to job displacement in various industries, raising concerns about the social impact of these technologies. We also need to be mindful of bias and discrimination. AI algorithms can perpetuate and amplify existing biases, leading to unfair or discriminatory outcomes. Transparency and accountability are crucial to ensure that AI is used ethically in finance. So, what's the bottom line? Is investing in AI stocks a good idea? The answer, as always, is it depends. AI has the potential to revolutionize the financial industry, but it's not a guaranteed path to riches. There are significant risks to consider, including the potential for an AI bubble, AI underperformance, algorithm dependence, data bias, and cybersecurity threats. Before you invest in any AI-related stock, do your homework. Understand the company's business model, its competitive landscape, and the risks involved. Don't just blindly follow the recommendations of an algorithm. Remember, AI is a tool, not a substitute for sound financial planning. Approach AI-related investments with caution and conduct thorough due diligence before making any decisions. And most importantly, never invest more than you can afford to lose. Now, I want to hear from you. What are your thoughts on AI investing? Are you bullish or bearish? What AI stocks are you watching? Let me know in the comments below. And if you found this video helpful, please give it a thumbs up and subscribe to the channel for more in-depth analysis of the latest tech trends. Thanks for watching.